Hello everyone, bulls win one day, bulls get slaughtered the next day. In today's video, we're going to take a look at what the next steps are for the market. Obviously, this is a chart of the VIX. We're going to take a look at the VIX. We're going to take a look at the S&P 500, the NASDAQ, the Russell, the yields, the bonds, put everything together. And of course, we're also going to take a look at the large tech stocks. All right, so without further ado, let's get started with the video. All right, so I adjusted my mic, good to go. I was talking like down here before. All right, cool. Okay. So guys, this is the daily chart of the VIX. All right, so the VIX is very important because it has an inverse relationship to the market. If the VIX is doing well, then that's generally a bad sign for the market, as we can clearly see. All right. Also, the $20 mark on the VIX is usually a danger zone for bulls. Right? If the VIX comfortably starts to trade above 20, then that's not really that good. But immediately, what we see right now is the VIX is comfortably trading outside of the upper level of the Bollinger Band. Also, earlier today, the VIX was up 15%. When the VIX is up this much, the next day is very, very, very rarely another green day on the VIX. So if the VIX rarely has another green day tomorrow, meaning if the VIX is not green tomorrow, it's going to be red, right? So if the VIX is red, then that should either be flat or bullish for the overall market. And that is my thought process for the market based on what the VIX is doing. All right. There's a few other reasons why I'm leaning a bit bullish as well. I got into some NASDAQ calls as well for October 6th. Or October 10th, I forget. But we got into some NASDAQ calls as well. And I'm going to explain that now. All right, so we're going to take a look at the large tech stocks now. So the first most important ones that I want to look at are the ones that took the biggest hit. So with Google like this, you can see Google is very far overextended outside the Bollinger Bands. Cool. Tomorrow, based off of okay, so, let's just look at the rest. Microsoft, also showing weakness, right? Apple broke below 173 and, started showing some weakness. Amazon also showed some weakness, closed outside the Bollinger Band as well. I don't even want to look at this piece of crap. But, and Facebook sort of, was an inside candle, but, yeah, the chips are also still holding their own a bit. AMD still holding above support, and the Van Eck Semiconductor ETF holding support as well. So basically, aside from Apple, right? Amazon, Microsoft, and Google are getting very overextended to the downside. Now, just looking at Google, is this a time to start going short? Absolutely not. This is not a time to go short, and it's just not a time to go short. You don't go short when things are already this overextended to the downside. It's for swings, okay? Intraday, tons of momentum to the downside. You could play short all you want, but right now, the reason why we're here is we want to look at what the next steps are afterward, all right? So right now, in my opinion, based off of the downward move on tech, and based off of the VIX being very far overextended, those are two good reasons why we should have a bit of a bounce heading into tomorrow. Let's see if that's the case, right? So far, 2 for 2. We got large tech stocks either holding above support or very, very overextended to the downside, leading to a bit of a bounce. We also have the VIX very far overextended to the upside, leading to a bit of a pullback. And if that pullback occurs on the VIX, which I'm assuming it will, then that should be flat or bullish for the market. So far, two pretty decently bullish things to look at. Also, you can look at Tesla. Tesla's also holding support. But next, we have to take a look at the bonds and the yields. All right. So the bonds also, you can see that the bonds So number one, the bonds are important to look at because they have an inverse, or they have a correlated relationship to the market. When the bonds are showing strength, the market is also showing strength generally, right? But now with the bonds this overextended to the downside, opening and closing outside of the lower level of the Bollinger Band, this weakness also cannot really sustain itself, which leads to a bit of a bounce. So if the bonds, the tech stocks, the VIX, showing some bullishness here, right? Now let's go ahead and just take a look at the yields. So obviously, 10-year yield isn't that overextended. The 5-year yield is also not that overextended. They're basically showing support. The 2-year yield actually looks the most healthy, right? Like pragmatically, the 2-year yield looks the most healthy. It came back, retested the breakout candles, and now it's like starting to move upwards, right? But then when we start looking at the 20 and the 30-year yields, these are getting overextended, right? So the 20-year yield, you can see it's opening and closing outside of the upper level, and then the 30-year yield as well, opening and closing outside the upper level. When it's this overextended to the upside, it needs to have a pullback. And if there is a pullback on the yields, so the yields also have an inverse relationship to the market. If there is going to be a pullback on the yields, if the yields fall, then that should be bullish for the market. So yeah, now it's just a matter of just being patient and managing your risk. This is the most important time to just manage your risk. If you want to go long, if you want to go short, do whatever the heck you want, as long as you are maintaining and managing your risk properly. Do not blindingly take any trade. You need to manage your risk. You need to be able to have stop losses. You need to allocate a smart, intelligent percentage of your portfolio into each trade. You can't just throw 50% of your portfolio into a trade. Say for 100%. People were doing this today. SPY at 428. Okay, I'm going to put 30% of my portfolio at 429. I'm going to put 30% of my portfolio in 429. Okay, it dropped $1. Let me put another 30%. So now you have 60% of your portfolio allocated between $1 from 428 to 429. And then you barely have any money left over. By the time you hit 425, you've already allocated all of your money by the time it hit 427. So you want to either allocate slowly, right? And understand that, okay, if it comes to if it hits, I want to have more bullets in the chamber in case it hits 425. So you can allocate money accordingly based off of that trajectory of where you think the market's going to fall. But then you could also take it trade by trade. You can tell yourself, okay, I'm going to go long here. If it doesn't work after a 10 or 15% stop loss, I'm going to sell. I'm going to go long here, etc., etc., etc. So those are just two ways that you can manage your risk a bit better. And then also when you are taking the trades with single trades, one at a time with stop losses, that is also easy because it's easier on you, because it takes the onus of having to be correct out of the equation. If you think that the market is going to be bullish at 428 and it drops to 427, you can sell and then you could reevaluate. You still think it's bullish, you can go long again. If it falls to 426 again, you could sell. So you can just continue to reevaluate your positions instead of averaging down and just digging yourself into a deeper hole. It doesn't work out, and that is not safe, and you end up, it's just not safe. It's not good. So regardless of what is going on here, regardless of what I'm saying, regardless of, these bullish, because at the end of the day, guys, like the market can just continue selling off. This doesn't mean anything. Me saying that this is bullish, at the end of the day, I'm doing my best to basically just show you guys like different reasons why I think things are the way that they are. But please, guys, like manage your portfolios properly. How many times have we been correct about, like personally, I'm 100% sure you guys have dealt with this as well. How many times have you guys been correct about a move, but you put too much of a percentage of your portfolio into a trade, and then it drops a little bit. Say, for example, you're in calls, right? And then it drops a little bit, and you're like, oh my god, no, like this, I'm already down 5% on my portfolio, 10% on my portfolio, I don't want to lose more. You sell it, and then 5 minutes later it skyrockets. The reason for that is because you had poor risk management. You had poor you put too much money into the trade, and that is one of the biggest things that take people out of winning trades. So, you know, just be smart. In my opinion, now is not the time to be leaning bearish. You know, day trading wise, you could follow along the momentum. I was not really day trading today, and yeah, you know, just please just be careful. Okay, the other thing is obviously the SPY is getting very close to this trend line support here. Tomorrow that level is going to be 424.40, and then the NASDAQ is sort of breaking a bit below it, but that is also, we're basically right at that level of support as well. So, you know, it's going to be interesting. It's going to be a pretty interesting next few days. If so, look. If the VIX, the best case scenario for like a very bullish move would be is if the VIX just skyrockets tomorrow. If it just skyrockets tomorrow, buying that dip would be fantastic. That would be when like the dip would be the easiest opportunity to go long. That would basically put us around 421. That'd probably put us around 421 if the VIX is up another 5 or 10% tomorrow and it continues to skyrocket. That'd put us around probably 421, 422. And then going along there, hopefully, you know, we could also obviously see the SPY close outside the lower Bollinger Bands. It's not that overextended. But ideally, if we do end up having another red day, a red open, and like a very, very green open on the VIX, then buying that dip tomorrow is going to be really, really easy at the open. And that's basically what, that's basically it. So I hope this sort of makes sense. And I'm excited. I'm very, very excited to see what the next steps are for the market. And, you know, the dollar is also not like, the dollar hasn't really been that formidable in its correlation. But I guess we could also take a look at the dollar, because the dollar technically usually would have an inverted relationship to the market. So it looks like that relationship is getting back to inversion, because before the dollar and the stock market were basically moving in unison, but now the dollar is starting to show a lot more strength. So when the dollar is showing a lot of strength, then it is bearish for the market. And, you know, technically that is currently what's going on. So, yeah, that pretty interesting. And, yeah, it's interesting stuff. So aside from that, I started offering free one-on-one 30-minute coaching sessions. So you guys could basically just talk about anything that you guys want. And I'm here. So you guys could just go to the link. I'm going to share the link in the channel description. And if you guys are interested, go ahead and just choose a time whenever. And completely free 30-minute coaching session. And I really, really hope that'll also help. And yeah, I'm excited to see what the next steps are for the market, to be honest. I really, really want to see some bullish move tomorrow, led by some tech, led by hopefully Google, Microsoft. And that's another reason why I went long the NASDAQ specifically, because the tech stocks are showing a lot of weakness. But let's see. Yeah, I'm pretty excited. Another reason why I went long tech is because Costco was going to have earnings. Costco is not a tech stock, so if Costco had bad earnings, the SPY and the IWM would be affected. So hopefully the tech stocks are going to show some strength heading into tomorrow. But ideally, the most bullish scenario would be not a bounce in the morning, but rather a pullback or an even more red open. That would lead to a good bounce. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all of that good stuff. Put on the bell notifications as well. So when you click subscribe, you could also put on, you could choose to get notified for this stuff as well. And yeah, sounds pretty good. And yeah, hope you guys enjoy. With that being said, have an amazing rest of your day and take care. Love you guys.